for your time. Thank you for coming to go through Oman Cement, the year-end Q4 2025 update on the performance, the financials, and accordingly we proceed. As we just regularly put the disclaimer, whatever information has to be taken at the investor call side once it comes to any investment decision per se. On the agenda, or the usual pact, the Oman Cements being quite the manufacturing of the cement and the leading pioneer in the country to continue to sustain the supply to the demand and help into developing the country as infrastructure and construction material input provider. So on the financial highlights, if you can you see the screen, please? Yeah. Can you see the screen, the graphs?
Yes, we can. Thank you.
Okay. We just wanted to make sure that we are speaking on the same page. On overall, there's a slight improvement on the cement sales comparative to the 2025, with almost 100,000 metric ton, 96,000 metric ton, which speaks itself about the market competition and the lifting happens once it comes to the cement sales itself. The production was also marginally positive if you compare it to 2024 by almost 2.2%. However, the clinker production in 2025 is considered lower than our budgeted. We wanted to do better than previous year, but yes, we did better than last year, but we didn't beat the budget. We wanted to continue to deliver further value addition even to our stretch targets internally. That's because of some shutdowns in the kiln 3, along with the continued trips for specific kilns. However, the overall higher limit in this clinker is around 97,000, which contribute positively to the performance. If we continue and we go on the performance of the financials, overall comparatives, you will find that the year 2025, the revenues have been better than 2024 by almost 1,700,000. However, once it comes to the net profit, the impact is a delta of almost 0.25% or 25%, mainly because of the 3 million riyal delta to the 11.1 million in 2024. Our net margin impacted unfavorably due to this kind of competition and cost increase to almost 11.89 on the net profit margin, comparative to the, or comparable to the 16.34 in 2024. So in nutshell, the performance was having some challenges over the past year, and due to some specific changes, specifically on the lease rental, which has costed us a bit of increase in the cost once it comes to the higher lease rental, increasing to almost to 1.2 million, comparative to 2024, which was only 76,000. And then also another element is this non-core profit, which has been a delta negatively impacting of 1.2 million due to the distribution of dividends and not much of surplus cash maintained on the bank call accounts and deposits. Then also there was adjustment of almost hydrated clinkers over the past 2025, roughly around 1.5 million riyal. And then the increase in the higher electricity due to import of electricity from the grid in the peak time. This is mainly on the performance highlights. And however, the market rebound and look into the investor trust through the movement in the share price trending above the 500 basis, which used to be around in the range of 390s in the 2024, and then moving to almost the 400 in 2025. And as March recent last, which is 2 days ago, it hits 545 basis, which gives the investor confidence and the appetite to keep Oman Cement on their portfolio, which we appreciate, and our commitment to continue to build and add value wherever it is possible. I'll open the floor for Q&As. Okay, so because I have a system issue with the screen, but next to me is Mr. Jing Tao. He is the acting CEO, and he is now almost in his 6th month in the company. Prior to Jing Tao, there was another gentleman who just moved out, Mr. Yapping. And now the gentleman comes to man the drive. With that, we have a young fellow who is also strategically poised to take the dimension from an achieving of green to a better green performance overall. I'll leave Jing Tao to welcome and say a statement, please.
Okay, good morning, everyone, and salam alaikum. It's an honor to attend this meeting. And from the December last year, I'm the acting CEO of the OCC company. And before I worked in Huaxin Group for more than 16 years. And I'm responsible for the concrete business and also the eco business. So I hope that my experience in Huaxin Group can benefit for OCC in the future. Because now that before that we just focus on the cement business, but we have a big potential like in eco business. That because after Huaxin came, that we also negotiation the government authority that we want to push the eco business. We want because we have enough experience about the MSW pre-treatment and co-processing. We have the more experience about the hazard waste co-processing. And also that we did the integration of the cement business. We did the aggregate, we did the ready-mix concrete. So I hope that in the future that the OCC, we also can integrate our cement business and to implement, to expand our business in the future to get more performance. Thank you.
Thank you, Jing Tao. So we leave the floor for the Q&As.
Hi, thank you for the presentation. I have a couple of questions. I'll start with what you mentioned regarding the competition. So we have seen some the competition growing fierce by the time, and now with the with the export markets in the region limiting, do you expect dumping from regional players into Oman to increase? And how do you see the competition overall now and going forward?
So if we may take this into two dimensions, one is prior to the geopolitical tension and or strike on Iran, and then post whenever it started. Prior to that, this kind of flow is continuously coming, and we see this is also still to be continuous of risk, and it's among those top 10 risks on our radar. And we are tapping with all the stakeholders, among which the authority, to see how this kind of supply to demand could be balanced in the country, wherever not Oman Cement per se, but all the cement producer came across, and also putting this concern on quality measures on imported uncontrolled quantity, that also being quite unfairly or on not level playground being brought to the country. So this has been taking attraction, and now is with the authority to see how it moves. This is on the phase before the tension starts. Now, once it comes to the tension versus triggered, we see sluggish imports coming from the port of Suez once it comes to the Iranian across sea. But UAE is still going and moving their cement to Oman, but not as per that huge quantity. So if the tension continues, maybe it might be one of those good years, like in 2022, whenever the Ukraine-Russian war has caused the fuel prices and the supply chain and the logistics disruption, increasing all the cost elements, made Oman Cement the saver among the others, players to supply whatever domestically comfortably available, rather than banking on other people who doesn't help during the stress time and lift the country to its own people to suffice the demand. Because once it comes to the commercial, if it is better for anyone who is outside the country to get a good premium on each tonnage, they would go after it, being commercially driven. However, while we are still commercially driven, we have a kind of a national patriotic pact to suffice the local demand to the level best of available capacities. And accordingly, our shareholders and the board itself, they have moved into more of debottlenecking and enhancement of the capacities, among which we've already spoken about 10% increase in the last year. And then also some kind of tweaking happening this year that might give us that kind of advantage of 5 to 10% additionally. However, if there is a significant, huge demand happens, which is collectively is not attended by all the cement producers, then we would go to the board and shareholders and we say it's the right time to invest. The beauty of the new strategic partner and the way that they drive the business and the efficiency also, which has already been in place during in review of the governance, we can get things done in no time. So there's a compression of the timelines to get things done if need be on capex and also growth and additional capacity to be made available for the country. Any other additional question, or we are done? So at least you allow the floor for other audience.
Yeah, no, I have a couple more questions, if you allow me.
Yes.
So from what I understand from your conversation, you mentioned that the competition was already there, but now because the prices are high, you might find increase in prices for your products as well. But as you are committed to provide to the local industry first, you guys will not capitalize on that as much. Is my understanding correct?
No, your understanding is incorrect. Our understanding, all commercial entities are driven by the market forces, but we will not be, as I would call it, leaving the support to supply to demand of the local market like other outside of the country invaders or players, whom, if they got the advantage to see it in other countries, they will not come and continuously supply whatever they used to be supplying before to sustain supply to Oman. So no one going to help the country other than the people who are there and available in place. This is mainly the statement on the disruption that might happen and has happened in 2022, as we've seen that no one has really came to give from their chase of margin and cut to help the country to bring considerable reasonable price clinker or cement to support the delta on the demand.
Perfect. Thank you for the explanation.
Yes.
My next question is regarding your issue with the natural gas and as if I remember correctly, you guys had mentioned on previous calls that you are in the talks with the regulators to allow you to use coal as fuel instead of the gas requirement that you currently have. Has there been any progress? Because gas obviously is expensive and it makes you less competitive.
No, see, on decarbonization initiative, coal was only a very, I will not call it tertiary, but maybe a fourth line of option. But currently we are having fossil fuel driving the energy and the kilns, which is based on natural gas. And due to the escalation of the prices also year on year, and also for 2026, there's a huge jump on the cost, which we'll speak about it in Q1. The impact is around 11% increase. And our kind of commitment in the decarbonization, we are tapping on all elements, starting from the time which you are aware about the tire sheds or the TDF, which we have it available, and we invested around $5.4 million. And it's being used for other purposes other than the tires, because tires issues in the market was a bit of complicated and made not fully available. So we are entering into alternative fuel, I would call it side agreements, in order to continue to find replacement of natural gas, among which we have this, we've spoken and it's already declared in our reports, the MSW RDF. This MSW RDF, we are in a bit of advanced stage, which we have spoken about it last year. And if things moves right, then the new JV would come right to the life, inshallah, hopefully in Q2 latest. If there's any change or development which warrant different statement or update, we will give you that highlight as well. But that will definitely help into a sizable reduction on the natural gas, which would allow the country also and the IGCs and other MEM and the Ministry of Finance to redeploy these kind of saved molecule to a better creating value supply. This is once it comes to the fossil fuel. A coal is not tabled as of now in the immediate requirement, but since the competition comes across regions based on coal, their fuels are based on coal, which is currently trending in the between 70 to 90. In 2022, was it hitting to almost like 460, 70 or so, from the range of 60, 70, $80. So if the coal still continue to be quite low, then it could be probably looked at if the resources available in the country and if the permission is obtained to use it in the country per se in the cement industry. But our drive is to use MSW, other alternative fuels, green bulks, whatsoever available in the country, and we are moving forward. We have invested in the TDF, what do you call it, project. We have invested in one waste bucket elevator for K1 in 2025. And we invested also in buying shredder, which is available and from Europe, which is utilized for this specific cause. As well, we are moving aggressively. We created a department, mainly we call it alternative fuel or alternative energy. And the team, we have structured them well with consultants and support from the group. Wherever now they are questing on the market on whatsoever alternative fuel components that could be brought to use them as an energy sources. And this is ongoing exercise, and we keep you updated as we go quarterly. So clear? Any other? Let's have another final question from your side before we go to the next audience, please.
Yes, sure. Thank you. And my final question is just a question of basic understanding. If there were an expansion, a greenfield, if someone were to invest in a new plant here, what would be the cost per dollar per ton of a new plant if, hypothetically one were to invest here as of now?
It depends. Now, if you are trying to find an intel on how best our Chinese shareholders and the bidders, once it comes to the putting a plant, it depends first of all on different variables. One line is about the fuel swingabilities or feed to that specific plant. The other side, it depends on the availability of raw materials and proximity to of those raw materials, because logistics and transportation is one load line, and also on the technology adapted, whether it's using that bore roller mill or vertical roller mill, and whether they are adding on top of each of those one also a decarbonization in components like the WHR, waste heat recovery, or not. But in essence, if I go back to my previous, and I would refresh this from 2023, 2022 and 2021, for a 5,000 ton, at the highest peak, 5,000 ton in Sahwa would have costed me roughly around 200 million dollar for 5,000 ton production. However, the market, if I capitalize now on a very competitive, aggressive availabilities in the bidding side, maybe you will find it lower than that by sizable millions dots.
Right, that's 5,000 tons a day. It's 1.8 million a year, right? Capacity.
Roughly.
Yeah, perfect. Thank you, sir.
Yeah.
Thank you very much.
Anytime. Yeah. So let's take the question.
We move to the questions in the chat box from Sandesh.
Yeah. So what is the question?
Read
the question.
Regarding the Mondi of Oman and LC, profits has declined roughly around 67% in 2025, and they would like some clarification on this decline percentage.
So let's have it interactive. I have my financial controller who is also following on this with the team. So Manish, just
So good morning to all of you. In fact, our Mondi, because of this euro appreciation compared to the dollar, and they are not payable in terms of euro, they have taken a hit of this forex. This is the major reason why their profit has come down compared to the last year. And by the way, this calculation is not correct. 67. It is a less than 53% decline compared to the last year.
So the preliminary, if I take this right, is merely an FX and the volatility and the change of the euro, which has on their appreciation has end up impacting the profit and the associate share that we receive on the dividends. Clear? Thank you. Next, Ghade.
We have another question from Mr. Mukhesh asking that in 2025, production was at 2.96 million tons. What is the current clinker and cement capacity? What is the planned capex and expected capacity utilization?
So in 2025, while it was on the rough of 3 million, we are targeting a 10% increase if market sustain the demand to continue. However, this 10% increase, it depends on the factor of the competition as well, and how we justify the balance between the volume and the price, because honestly, we have adjusted the price positively to offset the major exogenic uncontrolled cost drivers, among which we've spoken about in the comparative, that 2025 loaded with almost 1.2 million increase to the lease rental in comparable to 2024, and this will be carried forward. The other element, which is also the 3% escalation year on year once it comes to the manpower, and we are almost in the range of 74% Omanization. And on top of this, also the 3%, which is inherently positively sloped as increased cost year on year for the natural gas. So, and complicated with the additional 11% increase on the natural gas due to the change of formula from the calculation from the lower heating value concept to a gross heating value, which loads another 11% additional cost to us. So this is how we will balance our move once it comes to the productions to sustain the delivery of supply to the demand, in taking a balance of those different factors. On the capex, we have planned capex. We will not go on. Maybe I have already reflected on the Suhoor's discussions on the capex. We will not go heavy investing on multiple huge hundreds of thousands of tons made available, unless the demand is sustainably proven requiring that specific supply. This is one part. The other part, we are continuously doing the debottlenecking. And we did it last year with the clinker cooler, which gives almost 10%. We have other kind of modification we want to do in this year. And the team is working concurrently on bringing this between 5 to 10% additionally. We have other projects, which maybe Jingtao has in his opening statement, speaking about other stream of revenues, which is very promising if things moves right. And this stream of revenues will be both from a construction material company per se, coming from the upstream, the raw material. So aggregate by its all type could be locked in after we finish our feasibilities and verification, and we get the approval from the shareholders. This can be a good tick. And the other addition to that, then going onto the midstream on the RMCs, that also one line that we are looking to bring it live if things move right, and we have put a provisional budget for it. So all of these are considered in 2026, and hopefully it can be delivered before the Q3 ends. Other questions?
Mr. Mukhesh, second question, he has a possible fallout of the current geopolitical tension could lower to real estate demand in UAE. which will result in lower sales of cement locally. This might lead more exports to Oman. Do you think that the realization of Oman cement will come down in near term due to this, and there will be a pricing pressure? Are there any planned shutdown during this year?
Yeah, there is some planned shutdown. Even I think towards the end of this month, we will have one maintenance shutdown. And these are already robustly on our rosters or the plan for the year. Taking this later question as first. Once it comes to shift in the geopolitics, honestly, this uncertainty is not really guaranteed that it might come or being quite predicted right. So what's happening with these tensions? We do this what if scenarios and we play our kind of readiness plan. So among us for the NSR realization per se, we have adjusted specific products prices reasonably to stands in the money for keeping good margin on those products. And we are repositioning some of the products differently on the green decarbonization concept. And we are looking into a more of also shifting the philosophy from a specific ordinary of 42.5 strength cement produced to maybe a better quality in a 52 plus strength. And that if per se it can give an advantage of margin adjustment and also give the end user or the mid users a possibility to use lesser of the quantity with abundances of other mixes to create good margin for them as well. Next.
Any further questions through chat or any of the participants would like to add any other questions?
Another one. Yeah.
Okay, so I will answer the last. In the event of the shutdown, what would be the typical duration of downtime in terms of number of days?
Yeah.
So that because of the capacity of our 3K is different. So K1 and K3. K1 now so after Huajin came that we increased the capacity a lot from K1 that before is 2,000 around 2,200. Now it's around 3,000, and we hope that every year for K1 we need 2 planned shutdown. One is short term. Short term means that maybe 10 days, and another one may be a long short shutdown, maybe around 15 to 20 days. So we hope that like the K1 and also the K3, that every year we have the 2 planned shutdown. One is short term and one is the long term. And for K2, because it's for just focus on the other kinds of the cement, clinker and cement is for the SRC and also for OWC and the CWC. The capacity of K2 is not very high. It's around 1,500 or 1,700 per day. So we hope that every year for K2, we only have 1 long shutdown, maybe 20 days around this. Okay, thank you.
Yeah, which one?
We noticed a notification of around 10 million Oman in right of use assets recorded in 2025. Could you elaborate on the nature of this adjustment?
So let me take this. Yeah, in fact, our this lease rental, which earlier we were paying around 76,000 real per annum. Now it is almost 1.2 million real per annum. Because of this lease rental change agreement, this modification of lease has come around 10 million, both sides in our right of use asset and lease liabilities in the balance sheet. Hope this is clear to you.
So this is whatever we told about it earlier. One line that we need to adjust our kind of trending price to offset these kind of exogenic uncontrolled variables, as we've highlighted earlier. Among us, the lease rental charges increase, and also this kind of natural gas adjustments upwards, and then the manpower 3% increase year on year. Any other question, please? Ghade? Anyone? If anyone would like to ask, you can unmute your mic. Otherwise, we'll wish you all the best. And we wish also Oman Cement to be in a good 2026 performance, and that all mankind stay in peace, and these kind of distress and tension get stemmed out in no time. With that, we say thank you and have a great day. And thanks for coming. If you still have any questions, you can still contact us as per the contacts shown here. And we are available. My contact is also available on the slides to the bottom. And we say thank you. Bye-bye.
Thank you.
Bye-bye.
Thank you. Bye-bye.
Thank you.
You check out.